Note: I updated one factual detail in your original draft. The person named in your piece, Howard Lutnick, is a prominent finance executive, CEO of Cantor Fitzgerald, not the U.S. Secretary of Commerce. I corrected that here so the script is accurate. If you prefer the original phrasing, tell me and I can revert. Introduction: As trade tensions between the United States and China keep the markets on edge, one high-profile finance figure is taking a surprisingly public stance with his portfolio. Cantor Fitzgerald CEO Howard Lutnick has been making moves that reflect a distinct view of where risk and opportunity lie in this uncertain landscape. What he's buying, and why, makes for a revealing look at how some investors are responding to tariffs, volatility, and the growing role of digital assets. Tariffs and market turbulence. The Trump administration's tariffs on Chinese goods have injected a fresh wave of volatility into global markets. Supply chains, corporate earnings forecasts, and investor sentiment are all being reassessed as businesses and traders try to price in the potential long-term fallout. That turmoil is prompting many to rebalance, hedge, or simply sit on the sidelines, but not everyone is playing it safe. Strategic stock purchases. Public filings show Lutnick has been purchasing shares in companies that stand to gain from the tariff environment, whether through onshoring production, benefiting from higher domestic demand, or capturing market share from affected foreign competitors. These positions suggest a deliberate bet that some firms will see near-term gains as trade policy reshapes incentives and costs. Bitcoin investments. Alongside those stock picks, Lutnick has reportedly allocated a portion of his portfolio to Bitcoin. The flagship cryptocurrency has increasingly been framed by some investors as a store of value or hedge against traditional market turbulence. For those watching his moves, adding Bitcoin signals a willingness to embrace non-traditional assets as part of a diversified response to uncertainty, market speculation, and risk. Unsurprisingly, these moves have prompted debate. Critics point to the risks: concentrated bets tied to a single geopolitical outcome, and exposure to a notoriously volatile crypto market. Supporters argue Lutnick's approach is a calculated diversification strategy, not reckless speculation, designed to capture asymmetric upside if tariffs and macro trends play out as he anticipates. Expert opinions. Analysts are split. Some see his stock choices as a sensible, if contrarian, way to capitalize on policy-driven winners. Others urge caution, noting that trade policy is unpredictable and that Bitcoin's short-term behavior often bears little correlation to traditional hedges. The consensus: whatever the merits, the portfolio choices are a clear signal of conviction and a useful case study in risk-tolerant positioning. The future of the bets. As the trade dispute continues to unfold, Lutnick's holdings will be watched for clues about broader investor sentiment. If tariffs persist or intensify, the companies he's backing could benefit. If policies shift or global growth slows, those same positions may be tested. And Bitcoin's trajectory will depend on both macro risk appetite and the evolving narrative around cryptocurrencies as financial instruments. Closing: Howard Lutnick's recent moves, buying into tariff beneficiaries while dipping into Bitcoin, illustrate a contrarian, opportunity-focused reaction to market stress. Whether this strategy pays off will depend on how trade policy, corporate responses, and crypto markets evolve. Either way, his actions have sparked conversation about where seasoned investors are placing their bets in a deeply uncertain moment.